People ask us questions and they're certainly influenced by their view of the political realm.
I think when it comes to the big emotions that affect investing decision making, there's the excitement or greed or FOMO that causes people to make investment decisions that maybe don't end up being in their best interest.
Yeah, emotional.
Yeah.
Yeah.
And then there's the fear-based investment decision making. And I would say political fear is definitely a big, maybe one of the biggest. The other would be, if you actually have real fears about the economy or the markets that maybe isn't tied to politics, that can drive fear-based investment decision making. But emotional decision making is rarely effective. If it is, it's probably more luck than being right. The best kind of investment decision making is more disciplined.
Do you remember last week when we were meeting with a client? The two of us were meeting with this client. They've been pretty stressed out over the current, sort of political environment that we're in, and when the market dropped in April over concerns over tariffs, they were totally stressed. And I remember having conversations about whether or not they should get out of the market. Basically move to cash or cash equivalents. And of course, timing the market is never a good idea. And so apparently their answer to that was, okay, I just am going to stop looking at my investment account. So when they came in last week for a portfolio review, they came in with a great deal of trepidation, and we handed them a report, and you could tell they were nervous. And as it turns out, they said that we really haven't been looking at our accounts, so we're not really sure what to expect. And if you follow the markets, then you know that the markets dropped pretty sharply in April. But this has turned out to be a pretty strong year, particularly for stocks. And so when we said, your portfolio is up a lot on a year-to-date basis, they were really surprised.